in the healthcare space. And to Kevin's points around, trips to the doctor, elective surgeries, things that cause UnitedHealthcare to spend some of that premium money. How are things looking on a trend basis for some of those different things that people like to talk about on social media?
Sure. So just full disclosure, this is not a company that we officially cover at LikeFolio. Mostly we're focused on the revenue side for companies, and people usually don't talk about which insurance company they're subscribing to on social media. But they do talk about whether or not they're going to the doctor, or if they're canceling their doctor's visit, or canceling elective surgeries, that kind of thing. And that's a huge number for this type of company. So United has what they call a medical loss ratio, which is, as Kevin talked about earlier, they collect premiums and how much do they pay out. Normally that's around 83%, so they're keeping about 17%. Recently, it's got down to about 70%. So they're keeping almost twice as much as they normally would. And that's because people are talking about not going to the doctor. And you can see it was pretty steady for quite a while, but then right around when the quarantine started hitting and everyone started getting a little more scared, people started avoiding the doctor. And that was a huge spike up. And even though it pulled back, it's still going up. So it's a little bit of concern. You don't want to go to the doctor where there's, in your mind, maybe there's a bunch of people carrying COVID and coughing on each other and stuff like that. And you don't want to get it, so you don't go to the doctor. And then, of course, elective surgeries is a huge one. Tons and tons of people are canceling their elective surgeries. It's just completely non-existent now. I think it was down about 65% elective surgeries overall. And our data, people talking about canceling elective surgeries, is up about 1,100%. So that was a massive number. You really didn't do it that much. You just didn't postpone or cancel your elective surgery. And now it's you want to avoid the doctor. So these things are going to lead to obviously a better loss ratio, medical loss ratio for United and companies like it, so they don't have to pay out. And of course, if you're in the pandemic, you're not canceling your health insurance. So this is kind of the best case scenario for an insurance company. This is a really sweet spot for them. Alex, to your point though, who knows what's going to happen a year or two from now if all that preventative care is skipped. Maybe costs go up down the line, but right now it's definitely a good spot for United.
Yeah, Landon, we were talking about that before you came on, about the overall question it does seem like the dream world for insurers, because you're collecting all the premiums. No one wants to not pay their premiums, but you're not doing anything. But the question is, are you sensing anything in your data about the other side of the conversation is pent-up demand? Let's say you need knee surgery or ankle surgery or some elective surgery. The minute the coast is clear, there could be a flood of procedures and things like that catch up. So I wonder if any of your data shows that, any pent-up demand for some of these surgeries.
We don't have pent-up demand for elective surgeries, but we know that all those people that are canceling, that's something that they wanted to do, like you're saying, and eventually They're going to want to get that. It's going to be interesting because I think right now, if you want to have an elective surgery, it's wide open. There's really no wait, but probably at some point in the future, maybe 6 months, 12 months, it's going to be booked out years because there's going to be a flood of people coming back. We're going to have all that coming back. I know that the American Hospital Association put out a number that said that hospitals are losing in total about $50 billion in revenue per month. And if you think about who's paying that, that's insurance companies. So United is not paying that out as opposed to paying it out. So it's a great spot to be in. And you can see here on this chart, people talking about going to the doctor. This is sort of similar to people canceling. A lot more started going around March or April because they thought maybe they had it. But then everyone started backing off and saying, you know what, I'm just going to deal with it at home if I think I have it. And I don't want to maybe catch it or give it to somebody else. Another thing to consider, we're talking right now, and as we're speaking, there's a Supreme Court hearing going on, and the Affordable Care Act is, in question. I think that is huge. It's going to be possibly, will the mandate be removed? Will it be reinstated? That kind of thing. So will people have to have insurance? So there's a lot that's going into these insurance companies right now. I don't think that top line revenue is a big factor as far as earnings. I think that really it comes down to the expense line, which is what we've been talking about. people are using doctors and using that insurance far less. So the insurance companies are keeping more money. And then, like I talked about, there's a lot of politics at play over the next month or two that are going to be huge for UnitedHealth and others.
Yeah, Landon, I can't think of a space that's more influenced by potential regulation shifts than this one, and it's certainly been kind of in the crosshairs of that for years now and probably for years to come. Question for you, though, as you look at these companies, you look at kind of these thoughts on going to the doctor, not going to the doctor. You know, I personally haven't adopted this teledoc kind of, over Zoom appointment with the doctors, but just thinking about things logically, that should be, fairly high margin for the hospital, but also, you're not actually going there. You're not getting the same level of care to some extent. You'd think it would be cheaper for both the insurance company and the actual patient. Is that also something that if we move towards more of the checkups through, video conferencing and stuff, maybe more checkups happening, doing it for a lower cost, that's potentially beneficial for some of these companies as well?
Yeah, I would think so. I think most likely initially those kind of visits are going to cost the same. They're going to charge you the same. But I think that over time they're going to realize that they can get in far more patients, and it's going to be a little bit more competitive, and those costs will come down. There is data showing that telehealth appointments are up about 12% right now. So obviously that's on the rise. I think it makes sense for a lot of different situations. Obviously, for some, you need to go in and be seen. But for others, the doctor can probably do it just by talking to you over Zoom or something like that. So I do think that's great for the consumer, as long as there is competition and that all these companies can compete against each other. And like I said, the doctors realize that they can get maybe 5 appointments in per hour instead of 2 or 3, they can maybe charge a little bit less. So this is great for the consumer long term, as long as competition is allowed.